Welcome back to Fiscal Flows. We're now in the first week of earnings season for the big companies, and today we're diving into Asml, one of the highest quality businesses in the world. I invested in Asml about 1 year ago, and it has been my biggest winners in 2025. The stock is up roughly 98% in my portfolio, so today the big question will be, is Asml a hold, a sell, or a buy? Asml makes the machines used to produce advanced semiconductors. These are the chips inside your phone, your car, and almost all modern technology. Asml operates in monopoly position. They are years ahead of their competitors, and there's no one close to replicating their technology at the moment. This gives Asml a extremely strong moat, and it is really hard to disrupt. Currently, Asml has reported a record quarter and also a record year in Q4 2025. They reached all-time highs in sales, order intake, and also cash flow. Revenue grew about 15% in 2025, and also looking ahead, the outlook for 2026 is strong. Management expects the net revenues between 34 and 39 billion euros. That implies an average sales growth of around 12% per year. They also have increased their backlog by 8% year over year. Management added that customers are now aggressively expanding capacity. This is driven by strong demand in AI and memory chips, and that lines up perfectly with the growing backlog. Now, let's jump into fundamentals. The revenue for 2025 came up on 32 billion, so it should be around up here. And also, as we can see, the 3-year CAGR is about 15%, and also the growth in 5 years has been about 19%, and on average 10 years about 17%. So it's been growing in double digits numbers and pretty rapidly. The estimates that were made by investors were about 33 billion for 2025, and they got about 32.7, so it's pretty much accurate. It's been growing a lot, and this is estimates done by Wall Street. And then for 2026, they are expecting 35 billion, but the management claim that they're going to make around 35 to 39. So it's an average about 37 maybe. So it's higher than what Wall Street expected, and that's also why the stock is up currently. Net income came at 9.6 billion. Currently, for the last year, it was 8.3. So for 2025, it should be around up here. So that's also a great growth. And then they also had earnings per share of 24.7 euros, and that's about 16% year over year. Asml also has a pretty strong balance sheet. This is a statement, as we can see. So on their balance sheet, they have really low long-term debt. They have more cash than debt, so they can basically pay down their debt immediately if they wanted to. And also, as I saw, they did a new investment recently, an equity investment in a company called Mistral AI, which is a strategic investment totaling around 1.3 billion euros, as we can see. So now they own about 11% of the company, so they don't really control that company. Mistral AI is a French artificial intelligence company, and it's focused on advanced AI systems and also LLMs. This investment basically strengthens Asml long-term position in the AI ecosystem. We look further down on the cash flows. Free cash flow was lower this year if we compare to last year, as we can see. So it's still a net increase of 180, but compared to last year with 7.7 billion, it's not really the same. And the reason is that the company has been doing more buybacks of their shares than they did last year. So this year they did about 5.9 billion. And also they've announced that they're going to be buying 12 more billion. They're going to add a buyback program of 12 billion euros. Share buyback over the next 3 years. This shows a strong confidence from the management and also excellent shareholders' returns. So that's going to be good for the owners. The company also proposed that a total dividend of about 7.5 euros per share. So that's gonna be good. Now let's talk a little bit about valuations. It was cheap last year when I bought it, about in January, but currently I wouldn't say it's cheap anymore, but that's kind of expected because it's a really good quality company and it's really rare that they have low multiples. The current PE multiple is high compared to the 3 and 5 years median. So as you can see here, the median is 34.9, and then if you see 5-year average is about 37.2, while currently this is at 46.2, which is in the higher spectrum. But this is a world-class business with a monopoly-like characteristics, growing at the double-digit rates, and companies like this deserve a premium valuation. So looking at this stock currently, I would say it's a hold. Personally, I'm considering taking some profits off the table. Asml currently represents about 20% of my portfolio. I may reduce it to around 10%, not because the business has weakened, but because of risk management and portfolio rebalancing. So I'll just say thanks for watching for now. If you found this useful, leave a like and subscribe to Fiscal Flows, and I will see you in the next one.